Good day, grade 12 learners. Welcome to today's accounting lesson. My name, as your presenter, is Paddington Zinzombe. This lesson is brought to you by the Gauteng Department of Education in collaboration with Saibono Discovery Center. Please take note, this is an interactive session, so you can get us on our WhatsApp interactive number 064 748 8913. I'll go through it again. 064 748 8913. Now, let's get in today's accounting lesson. We are looking into paper 1 revision now. We are looking into paper 1 revision because we are going to be writing our paper 1 very soon. Next week on Friday, paper 1 you are in. So we are going through that. Now, please take note. In today's lesson, we are going to first have a breakdown of the topics that you must expect in paper 1. Because there is no need going forward now in preparation for paper 1 to be going through everything that we did this year. Target paper 1 topics, move paper 1 aside, and then you can go through paper 2 topics. And then we are going to look into topics that are assessed in both papers and look into the exact elements that you must expect going into paper 1. And then we are going to have a revision on those adjustments that we always face when we get to the income statement. And then we are also going to look into the balance sheet together with the notes to these financial statements. Let's get down to it. When we get to paper 1, these are the topics to expect. Income statement, statement of comprehensive income, balance sheet, statement of financial position, cash flow statement. And then we are also going to expect the analysis and interpretation of our financial statements. You know them as ratios. And then lastly, we are going to be looking into the issues of corporate governance and auditing. Now, these are the topics that are going to bring us the 4 questions that you are going to see when you write your paper 1. Please take note. The first 2, the income statement and the balance sheet, they usually comprise of the first question. And then we go to cash flow statement as our number 2 question, and then analysis and interpretation of financial statements, number 3 question, and then the last question, which is going to be on corporate governance and auditing. Now, please take note now, there are these topics that we are going to find in both papers, because these topics cannot be taken into only one topic. The first one is tangible assets. Now, please take note, in preparing our statement of comprehensive income, we are going to have to deal with issues such as depreciation, profit on sale of an asset, loss on disposal of an asset. So those calls that we need at least to have covered this topic going into paper 1. So the calculations that we may find in paper 1 includes the cost price of an asset, the depreciation, accumulated depreciation, the carrying value, the profit or loss on disposal, and the fully depreciated asset. You still remember the issue of R1 residual value. And then the other topic that we are looking into when it comes to a topic that covers both paper 1 and paper 2, it's stock valuation. Now, remember, when it comes to stock valuation, our intended goal is to have the closing stock. And why is it that we need the closing stock? It's going to help us to look into things such as if there is any trading stock deficit, or if there is some losses surrounding the issue of stock. So you are going to see that we are going to look into the calculation of the closing stock, and then the stock deficit, and then stock surplus if it's there. But please remember, when it comes to the calculation of closing stock, there are a number of methods that we employ in the calculation of this. So we are going to be using any of those three methods that we are aware of. The three methods, which are the FIFO, the weighted average, as well as the specific identification method. So in short, income statement, balance sheet, those are your financial assets. That makes up question 1, which can be a complete income statement without a balance sheet. It can be a balance sheet complete without an income statement, or it can be part income statement and part balance sheet. So that at least you need to be very much careful and aware of what's happening with our financial statements. And then remember the balance sheet and income statement, question 1, cash flow statement, question 2, interpretation, question 3, and then corporate governance, question 4. Now, let's get down into the details. To start with, today we are going to try and look into the income statement as well as the balance sheet, the two. So to start with, let's have the format. I think you still remember, when it comes to the income statement, nothing have changed from what we did in grade 10 and grade 11, except for a very few adjustments, which I'm going to try and bring around. Now, sales minus cost of sales to get gross profit. We have been doing this since grade 10. And then we add other income as well as subtract other expenses to get our operating profit. The only thing that you are going to see is there are a few expenses which are only applicable to companies, which we have never done in grade 10 and 11, but it's nothing new. We are going to have directors' fees, we are going to have audit fees, just to mention a few. And then, after having our operating profit, we are now going to go on to the last part, which is a little bit different from what we have been doing in grade 10 and 11. Now, check what's happening here. We have got our operating profit, which is shown by the 58,000 figure now. After operating profit, we are going to deal with the finance costs. Remember, interest is a finance cost. So we add interest income to get our profit before interest expense. We subtract interest expense to get our profit before tax. Now, in grade 10 and 11, that's where we ended, and we used to call it profit for the year. So in grade 12, we are just adding one more step. What are we doing now? We are adding tax as an item. And remember, tax is that contribution that companies give to the government. In other words, that the first share coming out of the profits of the company, it goes to the government. So in this case, you can see they are saying taxation is 28%, and this amounts to 16,520 in this case. And this is subtracted from the profit before tax to give our profit after tax. That is what our income statement looks like. We have been looking into this, guys, since January. Don't disappoint me in the exam and get stuck when it comes to the format. The format is the one cast in stone, the way we do things. We are accounting people. We can't disappoint. Now, let's move on to the format of the balance sheet. Remember, the balance sheet have got two parts. I would want to split these into two. So you are going to see that I'm putting a red line here. Now, the two parts are the top part forming all, which is assets. and the bottom part, which is equity and liabilities. So what we are just doing in the balance sheet is to just reproduce what we have been doing and what we know better, which is assets being broken down into two parts: non-current assets and current assets. Guys, I don't know how we end up not seeing this format. We are just saying we have got two types of assets, non-current and the current. Under non-current now, we have got two subtypes. We have got the tangible assets, which are referred to as fixed assets, and we have got the non or the financial assets, which are known as the fixed deposit. So those two makes up the non-current part. And then under current assets, we have got those three: inventories, trade and other receivables, and then we have got cash and cash equivalents. So when we add those three, it gives us the current assets. Now, to get the total assets, we now need to just add two figures. We need to add the non-current asset figure and the current assets figure to get to the total assets. And now at the bottom, we are having equity and liabilities. So when we talk of shareholders' equity, guys, we are looking into just two items: ordinary share capital and retained income. That becomes your note number 7 and 8, which you must know, which is a very important part of what we are expecting you to deal with in your exam when you write next week. Now, let's check on the equity part. We said equity, only two items: ordinary share capital and retained income, gives us the total equity. When we get to liability, we split them the same way we did with our assets into non-current and current. The non-current one, only one item is found there, which is our loan, the mortgage bond. And then when it comes to the current assets now, we are looking into firstly trade and other payables. And then we have got bank overdraft, if it's there, which is not an item that is always found there. And then we have got the short-term loan. Now, there are items such as shareholders for dividends. It is part of our trade and other payables. Sometimes we are having income tax that we are owing to SARS. It becomes part of our trade and other payables. But sometimes you are going to see that we also can record them and show them on the face of the balance sheet. Now, when all is done, we are going to add our equity, we add our non-current liabilities, as well as our current liabilities. These added together gives us our total equity and liabilities. And please take note, why do we call it the balance sheet? It must balance. Which figures are balancing? The total assets on one side, equity and liabilities on the other side. So the minute I get my total assets to be 12 million, it simply says my equity and liability section, if done correctly, should also give me the same 12 million balance sheet. Just the format. But I'll say this, the format is the way we do it. The format is cut in stone. The format is not going to change on you in the exam. So get into that exam knowing the format. So what is going to change? The figures. Because all businesses will have different figures depending on what they are dealing with. So the figures will always change. So go into that exam knowing your format, change the figures or bring in the figures as they are given to you, and then everything is done and we are fine. Good to go. This said and done, let's now have an activity to start looking into our income statement so that we can be in a position to see those adjustments that are always coming, as well as how best can we be able to deal with when we are faced with such in the exam. So this is indicating to say we have got an activity for the income statement for Tembiso Limited. You are provided with information for the financial year ended 28 February 2022. Now, you are required to do the following. Complete the following for the year ended 28 February 2022. Income statement, the statement of comprehensive income. That's it. That's what you are looking into. Income statement. So what we are going to be looking into in this activity are adjustments towards the income statement, adjustments towards the statement of comprehensive income. So the first one that we are given is the information. This is coming from totals that we are given now. The totals or balances that we have on 28 February includes sales, but there is no figure for sales. There's a question mark there. What does that mean? We are going to find it. Yes, we are going to find it. Whenever you see a question mark in the accounting question paper, it simply means that figure is not given, but they are simply saying you are equipped enough to be able to find it on your own. So we can be in a position to find that figure without any problem. So it says here, cost of sales is 4,856,000. No, that's where we are. So we are given cost of sales. We are not given the sales. We must be able to do something about it. Now, they are going to give us additional information, of course. Now, the adjustments and additional information says, when it comes to sale of goods, the company maintains a markup of 40%. What is this? It's the relationship between cost of sales and sales. Okay? What does that mean? It simply means our cost of sales is always 100%. When a markup of 40% is added, it means our sales are going to be 140%. That relationship. So it therefore means now it is the relationship that can help us to solve the issue of sales when we are given the cost of sales. Now, they also says, note that all goods costing 96,000, which are included in the cost of sales, were sold at 10% below cost price. Oh, check here. Sometimes we have got goods that we are having which we are failing to sell, and to take them out, we may decide to accept a loss. And that's what this business is doing. They are saying, in that cost of sales, there are two components. Goods that were marked up by 40%. And there were also goods that were marked down by 10%. So for us to find our sales, we need to separate the two. That's the only way. So we take 4,856,000. We subtract the goods that were marked down, the 96,000, which means the 96,000 we marked down by 10%. But the result of 4,856,000 minus 96,000, we mark it up by 40%. And after that, we add those two to get our sales figure. Let's see what we intend to do with this. What we are just going to do is to look into the total amount, 4,856,000. We subtract 96,000. Whatever we are going to get, we are going to mark it up by 40%. But when it comes to the 96,000 that we are subtracting it from here. And why are we subtracting? Because that 96,000 was not marked up. It was marked down by 10%. It means we multiply by 90%. So it is going to mean now we are going to have the answer from this, and it's 6,664,000. And then we are also going to have an answer from this, which is 86,400. It means those 96,000 worth of goods, we sold them at a loss. We accepted to lose 10% of the cost price. Anyway, these are our sales now. So we add these two figures and we are going to get this. And this is the sales figure. That's what is going to replace our question mark. What does that mean? It therefore means now when we get into the income statement, that's how it is going to look like. So please check here. According to this figure is already given to us. 4,856,000. Remember what it is? Cost of sales. And we used it to calculate the the sales from the marked up goods. And then we also used it to calculate the sales from the goods that were marked down. And when added together, we got our sales. Now, how do we get to gross profit? All my grade 10s know how to get there. So I know the class of grade 12, we all know how to do it. Sales minus cost of sales, we get to gross profit. Always the first part, the starting point. After that now, we are going to look into the issues of income as well as expenses, those needing adjustments. So let's check what are we given here. Now there is an issue of audit fees. Please take note. If you are writing a comprehensive statement in grade 12, that adjustment is there. Audit fees. Why? It's new. We never had audit fees in grade 10. We never had in grade 11. It was introduced in grade 12. So we want to check if you understood it. So we will always bring it. Examiners, they will always bring audit fees. But if you check here, there is no way in which we are going to pay more in audit fees, but the company will always pay less in audit fees. So this adjustment, it's always increasing from the figure that is given. So the audit fees figure that you are having there, 65,400, is the paid audit fees. If we have got to adjust it, it simply means there is an amount we are owing our auditors. That's it. We cannot have our auditors owing us. Never going to be possible. So what does that mean now? We need to just know how much are we owing them so that we can add it to that figure and we are done. Adjustments and additional information on audit fees. It says 75% of the annual fees have been paid. We are there. We said 65,400 is the figure paid. And they're saying 75% have been paid. So they're saying 65,400 is 75%. Simple. So it therefore means there is a 25% that is missing. And it is our duty to be able to find it. How do we find the 25%? Simple, guys. When we are looking for 25%, it's going to be 25 over 75. Why 75? Because that's what we are given. And then we multiply this by 65,400. Now, this gives us the 25% that we are looking for. First step. So, audit fees, I'm saying, we are always owing our auditors. They don't owe us. So, we want to know how much we are owing them. And what do we do? The amount owing, we add it on to 65,400. Done. Nothing else. So you are going to see that when it comes into the income statement under operating expenses, one of the expenses is going to be audit fees. So we are going to take the 65,400 that we are given and we add the 25% that is missing. So the 25%, when we calculate here, we are getting 21,800. So we add 21,800 and then we are going to get 87,200. But there's another way of doing it. We can just say we are looking for the total, and the total is 100%. So if we are given 75% and we are looking for the total, what we are looking for goes on top. So it means we are going to say 100 over 75. We multiply it by our 65,400 and it still takes us to 87,200. But please take note now. What significance does this figure have on the balance sheet? Because you need to know those things, guys. 21,800 is the amount that the business is owing to creditors. I mean to our auditors. And then it therefore means this figure is a liability. If it is a liability, now it means it is part of the payables. You never know, we might need it. So those are the things that you need to be in a position to understand, because if this adjustment is brought to the balance sheet, it is simply saying, tell us whether there's an asset or a liability in that figure. So in this case, there is a liability of 21,800, which goes into the balance sheet as payable. But remember, we are not looking into the balance sheet as of yet. Let's concentrate on the income statement. So remember, the UK method, it's saying unknown over known. The unknown is 100%. That's what we're looking for. The known is the 75%, which is 65,000. So whenever we are looking for an unknown figure, and we have got an unknown over 100, unknown over known 75%, and then we are done. Now the next item that we are going to look into is the director's fees. Not the same. Director's fees. Directors introduced in grade 12. So we are never going to run away from this. But the directors, it's not like the auditors, where we are owing always. Directors, we may overpay them. Some of them, they can ask for an advance. And sometimes the number of directors can change. So we can start the year with 4 directors. During the year, another director resigns. We are left with 3. And then at the end of the year, we can even hire 2 more directors so that they are now 5. So that needs now to be careful. And now, usually, the directors are paid the same amount monthly. What changes now is how many directors are we having each and every month. Or this director was there for how many months, so that we can be in a position to do the correct thing. Let's see this adjustment. So the directors have been paid 497,800. We are not sure whether we are owing them or they are owing us. Let's check what the additional information says. It says when it comes to directors' fees, the company has 3 directors who earn the same fees. So far, so good. One director was paid 2 months in advance. Oh, this director was in financial trouble, and he went on to ask the business to pay him for next year. So in other words, we can safely say director number 1 was paid for 12 months. Director number 2 was paid for another 12 months. Director number 3 was paid for 14 months. Why? Yes, because 12 months for the year plus 2 extra months, 2 months in advance. So in other words, we can safely say this amount of 497,800 is too much. We must subtract those 2 months. But how much is the 2 months? 12 months, director number 1, 12 months, director number 2, that's 24 months, and 14 months, director number 3. This gives us 38 months. So in other words, that amount is for 38 months. If we know that, can we find for 2 months? That we can do. we are going to say now 497,800 divided by 38. Can you see where the 38 months is coming from? 36 months for 12, 12, 12 for the 3 directors, plus 2 extra months for one of the directors. So we get 13,100 per month per director. So if we want to subtract those 2 months, we say 13,100 times 2. That's how we got the 26,000. So I think we are together here. So we overpaid directors by 26,200. How is this going to be presented in our income statement? Under operating expenses, directors' fees, 497,800 minus those 2 months, 26,200. There we are. Done. Dusted. I think we are still on the same page, guys. Let's move on in the interest of time. Now, when it comes to the next one, rent expense. The rent thing is always troubling us because they are always telling us rent increased by 2,000 during the year, or rent increased by 10%. And then sometimes they'll tell us, hey, we overpaid rent by 2 months, or the tenant have not yet paid. You know, those dynamics, you need to be in a position to understand them correctly to be able to deal with them. So let's see how we are going to deal with this one. On adjustment and digital information, it says, a storeroom was rented from June 2021 at 11,200 per month. Rent increased by 7.5% on 1 December 2021. Provide for the outstanding rent. Now, what it simply means here, it's very easy for us to be in a position to calculate this rent for the whole year. It's very easy. Why? Because you are just saying, remember, this was not rented out. We never rented this room from the start of the year. We only started in June. The year started in March. We were not renting. April, May, not renting. Only in June. So in the 4th month into the year. So it means now when we are renting now, we are starting in June, July, August, September, October, November. We are paying 11,200. But starting in December, we are paying an increased rent. December, January, and February for 3 months. So you need to be able to have that breakdown. 6 months, paying 11,200. 3 months, paying 11,200 plus the increase of 7.5%. Okay, let's not just say it. Let's do it and see how it's done. 11,200 times 6, 67,200. Are we okay with that? Straightforward. And then, when it comes to the last 3 months, we must start by increasing the 11,200 by 7.5. Remember, how do we increase something? We are going to say times 7, 107%. 107%. 107 over 100. Because it's going to increase by 7. So any figure always increase from 100. Because 100 is the total. We increase it by 5%, it becomes 105. So when we increase it by 7, 105, it becomes 7.5, it becomes 107.5. So it's going to give us 12,040. So the 12,040 is going to be from the month of December, January, and February. And when we multiply, it's going to give us 36,120. 36,120. Now, when added together now, this is going to give us the total rent for the whole year. So the total rent for the whole year is 67,200 for the first 6 months and 36,120 for the last 3 months. And it gives us 103,320. So the question says, provide for the outstanding rent. How much is the outstanding rent now? The outstanding rent is the difference between the total rent for the whole year and what we had paid. So this is the outstanding rent. The outstanding rent is the rent for the last 2 months, January and February. It means we have not yet paid rent for January and February. We have not yet paid rent for January and February. So it means we are owing. So what does that mean? It means this is a liability. And if it is a liability, it goes under payables if we are going to go to the balance sheet. But remember, for now, income statement is the name. Let's move on. SARS income tax, provisional payments. Now, this is a thorny issue. I don't know why we fail to understand this. Remember, we pay SARS during the year before the tax assessment. So we pay SARS during the year before the tax assessment. So if we pay SARS 341,800, now when we do the tax assessment, what is it that we are looking for now? We are looking for the correct amount that should have been paid to SARS. There are two things that are going to be a result there. It's either we already overpaid SARS, and when we have overpaid SARS, it means SARS is owing us as a business. And when SARS is owing the business, it is an asset. Straightforward. Or we might discover that the business is still owing SARS. And when the business is owing SARS, it means it's a liability. So let's check according to the information provided. They're saying the business is still owing SARS. We already paid them 341,800, but we are still owing them. What does that mean? It means the assessment gave us a figure more than what we have paid. That's the only explanation. If the assessment for SARS is giving us a tax figure more than 341, it means we are still owing SARS. So how much was the tax for the year? When it comes to something like this, you must know that we just add those two figures to find the tax for the year. Remember, income statement, we want to know how much is the tax. So there we are. We are given our net profit after tax as the last figure there. Now, we don't know the net profit before tax. We don't know the income tax. Is it possible to find these figures? I think so. But the first figure that I am going to be able to find, the one that we can find with easy, is the income tax. Why? Because we are simply going to be saying the 341,800 plus the amount that we are still owing. And it gives us the tax figure. That's it. So if you check now, tax is going to be 341,800 plus 31,300. Hey, there is something that was missed here. It's fine. It's 31,300, and it gives us our figure for tax. Income tax is 373,100. Good. Now, what do we do next? How do we find the net profit before tax? Now, check here. The bracketing is meant when we are doing things normally. What is normally? Coming from the top, going downwards. But if you check in this case now, for us to find the net profit before tax, we must do things the other way, which is the reverse way, which is from the bottom. Now, whenever you are coming from the bottom, signs change. What does that mean? It means for us to find the net profit before tax, we must say 959,400 plus 373,100. we must add the bracketed figure. Why? Because we are coming from the wrong direction. We reverse. Straightforward, right? What does that mean? It therefore means now we are going to be in a position to do it bottom up. From the bottom. When you're doing from the bottom, we say 3,959,400 plus 373,100, and we are going to get 1,332,500 income statement. Nice one. Let's see. Let's move on to the second part, the balance sheets and notes. Now, please look at this for me. It's saying, you are provided the information for the financial year ended 28 February 2022. So this is the same question from the one that we have been doing, but only now we are looking into the balance sheet. So the balance sheet always comes with notes. So you see, whenever you say tangible assets or fixed assets, note number 3. When you go down, when you say inventories, note number 4. So there are notes. So in this case, we are saying, complete the following for the year ended 28 February 2022, and then note to the balance sheet. So the first 2 is a note to the balance sheet, popularly known as note number 7 and 8, ordinary share capital and retained income. And then they are also asking us to do the equity section, the equity and liability section of the balance sheet. So we are going to do a balance sheet extract. We are not going to do everything. We extract that part. So you know what we are going to do? Let's go through the first 2, ordinary share capital and retained income. After that, 5 minutes break, Nyana, and then we conclude with the equity section of the balance sheet. So let's get down to it. Information that we are given to prepare the ordinary share capital. That's it. They're saying the balances that we have is ordinary share capital. So they're saying when the year started in 2021, remember that's the start, right? And then this 2022 becomes the end. So when the year started, the figure was 6,976,000, right? When the year ended, it had gone up. Can you see it to how much? 8,816,000. Let's not worry about the retained income for now. So it therefore means we have got the value of shares at the start of the year and the value of shares at the end of the year. Now, remember the format of the ordinary share capital. Now, this is the start. And can you see where the figure is coming from? I'm not going to repeat this one. Straightforward. And this is the end of the year. Can you see where the figure is coming from? Straightforward. Now, on the answer sheet, we are also given something very nice. They're saying to raise this 8,816,000, we issued 1,480,000 shares. Now, we are having some information that is missing here. We have got information that is missing here, as well as information that is missing here. It is our duty to make sure that by the end, we have got all those information entered and it's in place. That's why we are here, accounting people, the people who are tasked with making sure that monies belonging to shareholders is always safe. Now, what is the additional information saying to us? The additional information it's saying to start with, the authorized share capital is 1.6 million ordinary shares. You know what is authorized share capital? The ceiling, the maximum number of shares that we can issue as a company. So we are saying the maximum that we may ever think of issuing is 1.6 million. Now, they went on to say, on 1 March 2021, what is so special about this date? The start of the year. So when the year started, they're saying 80% of the shares were in issue. Someone would want to ask, 80% of what? 80% of the maximum. So if we are all agreeing that the maximum is 1.6 and the 80% of this were in issue, it means we can easily find how many shares are in issue when the year started by saying 80 over 100, which is 80%, times 1.6 million. That's it. And it's going to give us the number of shares that are in issue when the year starts. So we are going to get 1,280,000. Any problem with this one? I don't think there is. Let's take it now into our ordinary share capital. Things that we do better, things that we do best. When the year started, how many shares are in issue? There we are. Guys, I like this. We are just taking the figures and placing them where they belong, and life becomes very good. Now, what next? Now, the next thing that they said now, it's something happened on 1 May. Remember, our year started in March. In May, 300,000 shares were repurchased. Now, I want you to go there. Remember, we started the year with 1,280,000 shares. And then 300,000 shares were repurchased. And then they are saying at 465,000 above the average share price. Oh, 465,000 above the share price. Now, remember, whenever we are repurchasing shares, something should come to your mind. We need to know the average share price. We need to know the average share price. Okay, let's see. The average share price in this case, we are having a repurchase taking place soon after the start of the year. So we can use the information from the start of the year to find our average share price. So if you still remember, how much was the value of the shares at the start of the year? This was the figure. And how many shares were those? 1,280,000. So when we divide, we find the average. So we are saying on average, each share is being issued at 5 Rand 45. Now, these figures that I'm talking of are these ones. So I'm taking this figure, which we already had, and this figure, which we already calculated and we got, and we divide the smaller one into the bigger one. The value of the shares divided by the number of shares. And we found that is the average share price. We place it here. What's next? What it means now, we know how many shares were repurchased. 300,000 shares were repurchased at an average share price of 5 Rand 45. And then it's going to give us this repurchase. Whenever we repurchase share, we are reducing the number of shares that are there on the market. And the minute we are reducing, it means our ordinary share capital decreases. That's the reason why we are going to bracket the 300,000. We bracket the 1,635,000. Still okay. Okay. Now check. I'm not an accounting person. But something tells me something is nice here. If there is one item that is here, it means shares were issued at how much? I don't know. And I don't know how much is going to be here, but I don't know also how many shares they've been issued, which is not a problem anyway. We are counting people. Now, remember, whenever you are having a figure that is missing, which is not the last figure, it means now we are supposed to go bottom up. Check here. As long as the figure that you are looking for is not the last in the calculation, it means that's where we are starting from. We can only start from the bottom going up. And when you start from the bottom going up, what happens? Signs changes. So it's going to be 8,816,000. This becomes plus, and this becomes minus. Even when we get here, we start from 1,480,000. This becomes plus, and this becomes minus. That's how you find the missing figures for the issued. Now, it therefore means when they go to 31 October 2021, they are just confirming that additional shares were issued. How many? We don't know. For how much? We don't know. But is it possible to find it? Definitely yes. We are accounting people and we do know how it's done. Starting from the bottom, 8,816,000 plus 1,635,000 minus the opening balance, 6,976,000. It gives us 3,475,000. So that is the issue value. We also need to find the number of shares. Remember, we are starting from the bottom, 1,480,000 plus 300,000 minus 1,280,000, we get 500,000 shares. So it means 500,000 shares have been issued during the year for how much? 3,475,000. If we want, we can even show how much is the value per share. How much is the share price when we are issuing this? Ordinary share capital, done, dusted. Hope you are following. Let me share this secret with you guys. The ordinary share capital is one of the few new things that you are seeing when you get into grade 12, because it's not there in grade 10, it's not there in grade 11. And it would be unfair for any examiner to ignore this going into the exam. So, welcome to the real world, boys and girls. You are going to see the ordinary share capital not being one of the things that you must do in that exam. If you still have got any doubts, go look at it again and again and again. Especially the issue of the average share price. It's a must know. Average share price. How do you calculate it when things are turned upside down? When things are looking east or west? Whatever direction, you must be able to find the average share price and use it as required and appropriately. Now, we are moving on to the retained income note. Don't worry, don't get tired, don't even move from where you are sitting, because I'm going to give you your 5 minutes soon after this note is concluded. Now, the balances that we already had are now showing us the retained income issue. We are having, when the year started, 375,600. When the year ended, the balance is given. So we have got the balance at start, we have got the balance at the end. We are only left with something in between. Now, so you are going to see the additional information that we are given is that issue of repurchase. The item on repurchase is the item that is very important because it affects both the ordinary share capital and the retained income note. So, ordinary share capital, we said we use the average share price. But in the retained income, we use above. So they are saying here, 300,000 shares were repurchased at 465,000 above the average. Above the average. Above. That's what we are using, guys. The above. So we are going to take the 465 and we are going to use it in the ordinary, in the retained income note, because that's what we are looking for. That's what we need to know. That's what we need to be careful about. The above. So we know how much it was. It was 300,000 times 5.45, and we got the figure that we got from the retained income note. But now for this one now, we are interested in that above, which is the 465,000. So this now, when we get into our retained income, it's going to be, remember, shares repurchased. The balance here is a question mark, but we know what it is, right? And then we have got the repurchased, 465,000. Now, this is the information that we have. So we are going to take this figure into our retained income note, and you can see what it looks like. Because this figure, we got it from that information, and this figure, we already had it when we started. Straightforward. And remember the format. Always the balance at the start of the year, and then repurchases. The repurchase is always bracketed because it's a minus. Repurchase, whether you are in the balance sheet, whether you're in the cash flow, ordinary share capital or not, or in the return, wherever you go, cash flow statement, whenever it's a repurchase, guys, just know it's a minus. You bracket it because it's a reduction of the ordinary share capital, the reduction of retained income, the reduction even when it comes to the cash the business has because we pay for those shares. So we have got the net profit after tax, it's given already. Now, additional information. Now, check here. They are now talking of 31 August. Interim dividends paid is 30 cents per share. Now, what you need to always and remember at all times is this. When the year started, they said how many shares were there? 1,280,000. Can you see? Remember that? Now, somewhere in May, they repurchased shares. When shares are repurchased, what happens? There's a reduction. Can you still remember that? And then when there is a reduction now, it means we are going to have less. So somewhere in August, how many shares are we having now? 980,000 shares. Very important. So what are we saying? When the year started, we had 1,280,000 shares. There was a buyback, so it's a minus. So we are now having 980,000 shares now. Now, why is this important to know? Because they are saying on 31 August 2021, interim dividends at 30 cents per share. The minute they say 30 cents per share, it means you need to know how many shares for this to make sense. 30 cents per share. So you are going to ask yourself, how many shares were in issue on 31 August? March, 1,280. 1,280,000. And then somewhere in May, we repurchased 300,000. So how many are in issue now? When we get into August, it is 980,000 shares. So when you are calculating your interim dividends, it goes like that. 980,000 times 30 cents per share. It gives you 294,000. Straightforward. Are we okay there? Good. Now, in October, additional shares were issued, and we know how many shares were issued, right? Those 500,000. You still remember that? And then on 28 February 2022, the final dividends were declared. They are declaring final dividends. We know on how many shares, but we don't know how much per share. So we cannot find the final dividend as of now. So let's check. Let's put this figure into where it belongs so that we can see if something makes sense or something can easily be done or we can be in a position to influence something in any way. So you can see now, when it comes to this part, we are missing the ordinary share dividends figure. We have got the interim dividend because we calculated it and it's there. And then we are also missing the final dividends. But we have got the balance at the end. That's where we are. So your first port of call is to check which of the two figures can be found. Remember, in reality, we add these two figures, final and interim, to find this one, right? Good. But check here. If we have got this figure, the balance at the end, and we also have got all these other figures that are up there, it means we can find this figure first. So we can find the ordinary share dividends first before the final dividend in this case. So let's see how is it going to be possible and how it's going to be done. Here is where we are. So remember, according to what we have, there's a question mark here, there's a question mark here, but everything else is there. So assuming these figures are not yet in, how do we find this one? We start from the bottom. And here there's nothing, so we are going to leave it. And then here we are going to say minus. Remember, reverse. Plus. Minus. That's how you find your 486,400. You are starting from the bottom. You say minus 959,400. Which one is this one? Net profit for the year. Why are we subtracting it? Because when we're coming from the top, it's always what? Added. But this time we are coming from the bottom. So we must subtract it. And then we say plus 465,000. What is that? Repurchases. Oh, repurchases, you say it is always bracketed. Why are we adding? We are starting from the wrong side, from the bottom. So when it's bottom up, then remember we are going to reverse all the signs. And we are going to say minus 376,600. Why are we subtracting the opening figure? Because as it is, it's already positive. And when you are coming from the wrong side now, it has to be subtracted. After having this figure now, we remember to get 486,400, I must add 294,000 plus something. And remember, I don't have it. So is it possible to find it? Yes. 486,400 minus 294,000. That's how we can find this figure. Done. Dusted. Guys, this is your retained income note. I'm going to beg, I'm going to ask you a favor, guys. Ordinary share capital and the retained income, these two notes are going to be part of the two notes they are going to examine you on when you get into your exam. So know them. Know the format. Know especially how a buyback or a repurchase of share affects both of them. And when those are at your disposal, you can now be in a position to deal with those two notes. And when you can deal with those two notes, then it means your balance sheet section, it's nearly concluded and sorted. Why? Because that's all the equity you need. That's all the shareholders' equity you need. Ordinary share capital and retained income. So it means now what will be left now on that part of the balance sheet will be the liabilities only. Everything else is done and is dusted. Now, remember, I promised you some few minutes to drink some water and some of you to rush to the bathroom and come back and get ready for the next segment of this lesson. Now your 5 minutes starts now. Welcome back, boys and girls. Now let's get into the balance sheet now. Activity 2 balance sheet. Now check here. We are not doing the whole balance sheet. We are just doing a balance sheet extract, and we are looking into the equity and liability section. First part, the equity section. This is your equity section. Ordinary share capital and retained income balances at the end. That's it. So I'm not going to waste time on this one. There it is, the balance sheet extract, shareholders equity. We take the ordinary share capital, we press it in, retained income, it's in, and then we add the two to get our ordinary shareholders equity. Done, dusted. Let's move on. The next thing that we are now going to look into is your non-current liabilities. Now, when it comes to the non-current liabilities, if you check according to this information, we are given the loan balance at the start of the year, but there is no loan balance at the end of the year. Now, because of that, they are giving us information. Now, the information that we are given is saying we took a loan from LSO Bank. Now, they're saying we are making fixed monthly repayments, which includes interest and what? And the capital portion of the loan. So it therefore means now this is monthly, because they said monthly. For it to be yearly or annually, we must multiply it by 12. Good. And then the capitalized interest amounted to 242,500 for the year ended 28 February 2022. Interest for the next financial year is expected to be 162,000. Part of the loan will be repaid within the next financial year. Now, there are two things that you need to know. We have got the opening balance, we don't have the closing balance. So we must find the closing balance. How do we go about it? Opening balance minus repayments. Repayments always reduces the amount of the loan. So if we are having a balance of 1.725 million, the minute you start repaying, it is going down. So repayments must be subtracted. But when they charge you interest, interest increases how much you are owing on the loan. So it means there are two figures. One must be added and one must be subtracted. So there we are. We want to know how much are the annual repayments. It's 242,500. But at the same time, there is also need for us to know how much is going to be our short-term loan. Now, what is the short-term loan? The short-term loan is the amount that is due next year. The capital portion of the loan that is due in the coming year. The short-term loan is the capital portion of the loan that is due next year. And how do we find it? The capital portion is always the difference between the repayments and the interest. Because remember, the repayments are saying repayments including interest. So it's interest and what? And the capital portion. So if you want to find the capital portion, what do? You say repayments minus interest. So short-term loan, it's simply going to be 379,200 minus 162, which is the amount that is expected to be repaid next year. And then when this is said and done now, we can now take it for us to be in a position to find how much is going to be recorded. So we start with the balance at start minus, can you see? Minus the repayments plus the interest. And then we subtract the short-term loan. And then that's where we are. Done. Dusted. Very important. When it comes to the loan balance, what do? We say opening minus repayments plus interest. That is the loan balance. But now we also need to remember the short-term loan is always subtracted now from that balance. That's why we are subtracting the 200 and 17,200. That's it. Next, we are going to the part on current liabilities. On the current liabilities, we need trade and other payables, right? This is the first item on trade and other payables, trade creditors. And then you still remember that issue of the loan, right? And we found something like 24,080. That was still owing. And that, remember, I even told you it's a liability. So it also joined there. And then audit fees, you still remember we did a calculation for audit fees. The 25% that we are still owing, it also belongs there. So in other words, we're just taking these figures and we are doing the calculations, and then we remember the rent amount is going to be 24,080. The audit fees amount is 21,800. That's it. And then when you add them together, they give you the total figure for payables. The figure for shareholders for dividends, remember, this is coming from the retained income, which is what? Your final dividend. So this is simply your final dividend. And then SARS income tax. This is the amount that we are owing on tax. You still remember when you dealt with the tax, they even told us how much we are owing on tax. And then that is the one that is going here. It's given. Tax amount owing. The current portion of the loan is the amount that we just dealt with in few minutes ago. And that's the one that is going to go here. So in other words, these figures are already there and we are just going to bring them in. So you can see on the one, when it comes to the when it comes to this one, we already found this. Shareholders for dividends, we took it, it's coming here. SARS income tax, it's given, we put it here. And then the short-term loan, this part, it goes here as a short-term loan. And then after that, we are going to find the total. Remember, this total, it's a result of adding our equity plus our non-current liabilities and our current liabilities. Equity plus non-current liabilities plus current liabilities. Done. Dusted. That's our balance sheet. Now, to just end the day, I am going to bring in this other sticky issue where you are given a net profit that has already been calculated, but with some few missing adjustments to deal with. Let's see if we can be able to deal with something that is that small for the remaining minutes. Now it says here, Skakane Limited, the following information relates to Masakane Limited. The financial year ends on 28 February 2022. You are required to calculate the correct net profit after tax for the year ended 28 February 2022. You must indicate where there's an increase and where there's a decrease. So in other words, we are going to check what effect is the adjustment having on our net profit. Is it going to increase our profits or is it going to decrease our profits? If it is increasing our profits, we say plus. If it's decreasing our profits, we say minus. And then we are going to be done and dusted. Now, these were some of the balances that were given, but now we need some additional information to be in a position to deal with what we have. It says, the net profit before tax is 2,750,000 and 750 rands. Now, was determined before taking into account the following information. So this is our starting point. Net profit before tax, it's given. So that's our starting point now. That's the net profit that we have that have been calculated before the following adjustment. So what we are now going to do is to just adjust as required and see how it works out. The first adjustment says, on 1 December 2021, MN Kize, a debtor, returned merchandise. A credit note for 200 was issued to her, which is the cost price of the goods was 1,250. No entries were made for the return of merchandise. These items were returned to stock. So there is a problem here. When goods are returned, they affect sales, they affect cost of sales, and they ultimately affect our profit. So it therefore means goods were bought for 1,250. We ordered goods for 1,250, and we went on to sell them for 2,000. And then the debtor is returning those goods. So there is need for an adjustment onto our sales figure and an adjustment on our cost of sales figure, which is an ultimate adjustment on our profit. Now, they are also saying here, auditors discovered that the profit on disposal of a vehicle for 8,000 was incorrectly recorded as a loss. What is the effect of profit on our net profit? What is the effect of profit on disposal on our net profit? It must increase. But if we record it as a loss, it means we subtracted. Wrong sign. A plus was taken as a minus. So let's see how we are going to deal with these two adjustments now. Now, check here. The net adjustment of this is 2,000 minus 1,250. It means these goods were being sold at a profit of 750. So it therefore means now we added a profit of 750 by selling these goods. When these goods are returned, it means we must reduce our profits by 750. That's exactly what we are doing here. So you can see the 750 is bracketed. Bracketing simply means what? Minus. Remember the question said indicate by plus or minus. So here we are saying minus. And then we go to the profit on sale. Remember, instead of adding it, we subtracted it. So whenever it is the wrong sign, whenever you are making a correction now, the figure must be times 2. So we are going to add 16,000. Remember, the first 8,000 is to cancel the mistake. We subtracted 8,000. So if we add 8,000, we are saying we never did anything. And then the second 800 is to record the correct thing that has to be recorded. So it's simply going to be plus 16,000. But remember, we are counting people. They said indicate by plus or minus. So whenever you leave a figure without a sign, it means it is positive. So our 16,000 is positive. Now let's move on to the next adjustment. The next adjustment says the auditors are owed a further 28,000 after the completion of the audit. So we are owing auditors 28,000. What does that mean? Remember, audit fees, it's an expense. So if they are owed and it was not recorded, it means when we used our expense, the figure that we entered was less. So we must add on the expenses. But remember, the minute you add on expenses, you are reducing profit. So that is going to affect our profit. That is going to reduce our profit. What about the next bulletin? It says, KB Builders was paid 200,000 for the construction of a storeroom, 120,000, and the repairs to paving, 80,000. The entire amount was debited to land and buildings in error. Now, remember there is the issue of capital expenditure and revenue expenditure. So 120,000 should go to land and buildings because it is increasing the value of land and buildings. We don't have a problem with that. But 80,000 repairs and paving, that one is an expense to the business. So it was not supposed to be recorded as a capital expenditure. It was not supposed to be recorded to the land and buildings. It should have been in our income statement as an expense. So that is going to reduce our profits. There we are. The two amounts going to affect our profits in a negative way. So let's see how it's going to be done. Auditors, we subtract 28,000. Why? Because there is an amount owing to to auditors which was not entered. 80,000 we must subtract, not the total amount of 200,000, not including the 120, only the 80,000, because that's the expense. That's a revenue expenditure. That is the amount that affects our profit. Minus 80,000. Now, it therefore means now, in the absence of any other adjustments, we are now going to find our net profit before tax now by saying the 2,750,000 minus 750 plus 16,000 minus 28,000 and minus 80,000. And then it's going to give us what we need next. But now, that's profit before tax. We need information on tax. So income tax was calculated at 30% of the net profit. What does that mean? It means now we need our net profit before tax to calculate our tax. So we are going to find from the top going until here, and this is what we got. 1,908,000. So this is our net profit before tax. For us to find our tax now, we are going to say 30% times 1,908,000. Remember, when they say 30% of the net profit, we are referring to net profit before tax. So the net profit before tax is 1,908,000. We subtract 30% tax there, and it's going to be 572,400. When it's done and dusted, we are going to get our net profit after tax. And the net profit after tax is 1,335,600. Now, this is what was expected in this instance, where we are supposed to calculate a correct profit after taking into effect some problems or mistakes or omissions that were done when we're dealing with this item. So please take note. We are going to be writing, and one of the things that we are going to look into is our financial statements, and specifically the income statement and the balance sheet. If I was you, tonight my study for accounting is going to be looking into the income statement and the balance sheet. There are adjustments that are always familiar, that we always have got to deal with. Check them again and again. Remember, there's going to be an adjustment on trading stock deficit or trading stock surplus. That one is coming, is there. The other confusing adjustment when it comes to the income statement can be the provision for bad debts adjustment. Try to deal with it. Try to contain it. Try to see how best you can be able to deal with it. Remember, when it comes to the provision for bad debts adjustment, we are only interested in the adjustment, in the difference between the provision that was there at the start of the year and the new provision that you have calculated. When there's an increase, it is income. When there's a decrease, it is an expense. A provision, when it increases, is an expense. When it decreases, it's going to be income. Check that adjustment. Check adjustments on audit fees. Check adjustment on the director's fees. Check adjustment on rent. Check the adjustment on insurance. It's always a common one. And then the likes of those ones. Do also look into the calculation of depreciation if you have to, because you might find it today, you might find it in paper 2. And then we are also going to have to look into the balance sheet. Format must be somewhere where you will always be able to retrieve it, deal with it, and do everything the correct way. There is no way you are going to avoid ordinary share capital note. There's no way you are going to avoid the retained income note. Please take note that it was a pleasure from me to have you today in this lesson. Thank you for watching. Please remember, you still have to sanitize, to wear your mask, and maintain social distance, even if we have got to work in groups. See you next time with another second segment of the revision for paper 1. Revision for paper 2 will also be coming. Until then, enjoy, take care, and make sure you study hard. Thank you.